Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, June 22nd, 2025. So, a lot to go over here tonight. Um, so we Trump authorized Operation Midnight Hammer, and we hit the facilities in Iran, and they seem to think that this is just a one-off. We did our job there. We're going to have, Iran's not going to be able to have any nuclear capability, and this is the end of it. But uh, I've been saying it's not going to be just Iran in this because everything is intermingled. And one of the things that I mean, like I said, China gets 80% of their oil from Iran. So they're now, I know the prime minister or somebody from Iran is meeting with China this week, which has me a little concerned. But in any case, what the way that Iran has retaliated to this is that they're actually the parliament has agreed that they want to shut off. I think it's called the Strait. Hang on one second. Okay, here it is. The Straits of Hormuz, and if they do that, the problem that's going on is that 30% of the global seaborne oil, as well as the 20% of LNG traffic, comes through this lane. So that's going to disrupt the oil end of things. And some analysts are saying that if this happens, that we could see crude heading up to 120, $130 a barrel, which will destroy. I mean, it will definitely hurt our economy because if oil prices go back above $4 a gallon, that inflation is there, and everything that Powell was thinking about inflation could be right, but just for all the wrong reasons. Though it's not because of the tariffs, it may be because of this. So there's a lot of things that we have to wait and see that what unfolds, and it's just it's a little nerve wracking right now just to see because hopefully this just ends and it's all over. But as I said, I don't think it is going to be, and I think there's a lot of things that we have to just wait and see what happens. But that is one of the concerns that I've had. And again, what I've been showing on the charts is that we have one, two, three, four. We have five clear waves up here. Typically, whether it needs to extend or not, once this fifth wave completes, we're going to get a retracement anywhere from 50, 62 to possibly 78% of this entire rally. So if we go down to the 78%, we're coming all the way back down to the 417 lows on it, which there's a possibility, especially if we start seeing inflation spike up because of this the conflict that's going on in Iran right now, and if other countries start to get involved with it. So it's something that we just got to keep an eye on. We have these bearish divergences as well. So it's there's a lot of reasons pointing that where I said I wasn't sure what the catalyst would be, that this is the possible catalyst that's going to drive the markets lower because as I've been showing you, sentiment's been at extremes where everybody is looking just up, just like the sentiment was at extremes when everybody was looking just down. It's a pendulum that goes back and forth. So when it's here, it doesn't mean that it has to go right down. It could keep going a little bit further, but once it does, it's going to swing to the other way. And if we get this type of pullback, I'm sure sentiment's going to be back to these levels here, and that will probably be the time to start looking to buy. And if something like this is still going on with this conflict with Iran, everybody's going to think that it's there's no way to resolve this, and some way they will, and then we're back up making new highs in the fall. So this is, just a lot of things that we got to keep in mind. It's a lot of moving parts, and from a technical aspect, it makes sense. I'm hoping that this does end like with just what happened, but I'm a little bit fearful that it's not. So let's go over. I'm going to switch charts here just so I don't have to do them later. Okay. So in the morning notes, Friday, it was going to be a tricky day because there was options expiration. There was some 5.8 trillion, I believe, that were expiring that day. So it was going to be a very volatile day. And what we were looking for, the probabilities here, because trying to pick exactly what was going to happen on that is was almost impossible because we just get these massive swings in both directions. So the probable close, this was the important one, between 59.25 and 6,000. If we were able to get above the 60.50, then we were looking for a short squeeze up to the 6,100. If we went below 5,900, we would have seen a move down to the 58. So let's take a look at what happened here. And oh, hang on one second. Let me just move this. Okay, so this was the start of the day. We got this gap up. It made it right up to the 6018. That was the high some 10 minutes later. We got the pullback. And again, once we went below here, this is where I was thinking that, all right, you don't really want to be looking long. If it would have held here, then I would have expected another move back up. But once this gave way, and you can see you almost had like a little a fake move here where everybody, like I was saying, was looking for the move to come up. But I didn't make any trades on it, and I was actually thinking that they're going to come close this gap. And again, they made it to this. We got a bounce, and then we came back down again. And we kind of chopped around here, but you can see that the 59.52 was the low. So if we go back to where we were on this, it falls right in the area that this was predicting where the market would close between 59.25 and 6,000. And we never took out the 5,900, so there's no move down to the 85.50, 5,800. Sorry, 58.50, and there was no move above the 60.50 for the short squeeze. So from there, we came down, we made the low, and then started bouncing around, and it was just a chop fest. So I made a few $100s with the fund. I put in when we were up here. I kind of made a mistake because I once it was up here, I was selling the call premiums, which was very easy to do. But once we got here, and I was thinking support was going to hold, I started selling put premiums. We got stopped out. So anything we made here, we pretty much gave back there, and like I said, made a few $100. But in a volatile day, I didn't really want to take an actual position on up or down because if you end up on the wrong side, you can be, your trade can be done in a matter of seconds, and I didn't really want to deal with that, so I was more selling premium. So let's go back to everything that we're looking at here. So here's the 15-minute chart. It's showing that we could get a bounce tomorrow. Again, I'm not sure what this, the escalation in Iran is going to do tomorrow. We may see the S&P open down 100, but we've seen times of war, especially when we did the Iraq one, where the markets rallied. So I'm not quite sure what's going to happen. I think within the next 2 weeks we're going to have a pretty good idea. It may even be sooner than that, but as I just showed you on the daily chart and everything else, I believe bounces are going to get sold, and we are going to start that move that I'm looking for through the daily chart, where we're going to get a move down here. So we could get, like I said, we could get a bounce tomorrow because of the bullish divergences here. And that would really be looking for a move probably coming somewhere back up to the 6018 level. And I can see, and this would most likely be a trap, but if you kind of use your imagination here and say, all right, that possibly could be the left shoulder. And this is really what I do all the time. I look at patterns and then try to, see what could play out on it. But if you look and say, okay, that's the left shoulder. We're making the head right now. And now what happens is we would look for a move to come back up here. It would get moved back. It would get held down where this is now the neckline right here, and then come back down to this level. And what I would be thinking is we get a move up that people are going to start seeing this pattern. And it's not huge. We're talking the top of it is 60.20. The head part is down at 59.54, so about 70 points, but that would still take us back above these levels if it was going to play out like that. And we would be back up at up there. Now, what I'm thinking is this, because if these are bottoming patterns, and if we look at the hourly chart right here, we're not really at the bottom of the chart. So if it was to take place, hang on a second. Say someplace down here like this, that's a bottoming where you get the inverted head and shoulders, and then you could use the pattern. But when it takes place up here, where we're actually closer to the highs than the lows, it's taking place at the wrong area. It's at the top of the pattern, not the bottoming, because this is a bottoming pattern right here. Well, this is right here a bottoming pattern. But if it's taking place at the top, what happens is often it turns into a reverse symmetrical triangle and actually traps people. So we get the move up here, and then all of a sudden, out of the blue, so here's your down. Here's the 1, 2. We would get a move somewhere up here, maybe to close this gap right here at the 60.27. But this would all take place after this. So I would anticipate that the 60.18 would hold. We'd come back down, and then when we break through it, this would be the false move, and we may just close this gap right here and then come back down again. And that would trap a lot of bulls right there, because if you're looking at this pattern, you're anticipating that we're going to be taking out these highs up here and heading higher. So this is something we just want to keep an eye on, because they like I said, the market, I don't know what's inside or how it does it, but it makes the majority lean the wrong way. It just does. Don't shoot the messenger on this, but the majority has to be on the wrong side for an important reversal to take place. And right now, everybody's on the bull side. So if we get something like this, a pattern like this would trap the bulls that are chasing that move that's going to take us up somewhere into the 60.90 area, and or yeah 60.90. And then but if they jump in and then all of a sudden we see a move back down, that's where we could definitely see some bulls that get trapped. So right now the 15-minute is saying that it's looking higher. Again, if we take out these lows, then this pattern's not going to be in play. And then we would just really keep an eye somewhere down here for support if it doesn't gap below it, and that's right around that 59.32 level. If we gap up tomorrow, we got to keep an eye right here. This is the this 59.97. If it gets above it, that's where I believe this pattern will start forming. So we want to keep an eye on that. So when we take a look at the hourly chart, again, this is almost, we kind of got conflicting stuff here, because you remember the pattern that I'm showing you. This was, I showed you, I think, on Wednesday. So this is that triangle pattern, and I had, what I was anticipating is that we were going to come up here, but we ended up breaking through it on the downside already. And if this is going to play out, we're looking at a move coming somewhere down into the 58.50 level. And there's a possibility we just come to this support right here down at the 58. Trying to see my cursor here. It's hard to see it. 58.61. So that's if this pattern plays through and we come down here. Now, if we go back up, we're just going to really keep an eye on the pattern that I just showed you, and that's this inverted head and shoulders. So this would be your natural resistance if the bulls can get above here and then come back down, and we would look for support somewhere between the 50. I don't know why I can't see this stuff. Right around that 59.82, and then that would be where that's the support, and then from there we would get that head fake move up and down. But right now, technically wise, the 15s are looking for a bounce, the 60s are looking for a bounce. But if we gap down tomorrow and this starts coming down further, then this whole thing is going to be washed out, and we're going to be paying attention to the daily charts that are saying that we have a deeper retrace. So instead of guessing what's going to happen, let's see how we're going to open tomorrow. That will give us a pretty good clue as far as what the next move is going to be. But I've been warning for really the past 2 or 3 weeks that you want to be on the defensive end of things right now, and it's mainly because of the technicals. So let's see what plays out tomorrow. Have a fantastic rest of your weekend, and I'll talk to you in the morning.